Welcome back to Yahoo Finance Live. We are watching shares of Hilton fall in the session this morning, down nearly 4%. The hotel chain reported a revenue miss and disappointing forecasts. Let's go deeper into those numbers. We've got Kevin Jacobs, Hilton CFO. We've also got our very own Brian Sazzi here with us at the desk. Good to talk to you today. Let's start with the guidance, because that seems to be where investors are concerned. If you look at where the stock reaction is, talk me through some of the headwinds that you're seeing in the quarter.
Yeah, thanks, Akiko, and thanks. It's great to be on with you all again. And it's actually great to be here talking about the things we've been talking about, like, growing demand for travel across the globe and actually giving guidance again and doing things like returning capital. And so we're not really seeing headwinds in our business. We've given guidance for the first time since the pandemic. Our guidance at the midpoint, I can't really comment on how that relates to what the market's expectations were, because we haven't been giving guidance and they've been setting their own expectations. But we're giving guidance that at the midpoint of our adjusted EBITDA is back to 2019 levels. It's actually right about flat to 2019. And so we feel really good about the growing demand for travel across all of our segments. It's largely been, throughout the pandemic, a leisure-led recovery, and leisure demand remains quite strong. And now we're seeing actually significant strengthening in both business and now group demand. And so we feel really good about the prospects of the business, and we're not seeing headwinds, we're seeing tailwinds.
Kevin, Brian here, good to see you. Within that guidance that you provided, have you baked in a summer travel boom?
Yeah, we think this summer is going to be, after setting records in our business for travel demand and revenue last summer, we think this summer is going to be another sort of all-time record. And so, yes, that's baked. That's all baked into our guidance as a really strong summer season. But again, following up later this year with improving trends in corporate and then group in particular, we think is going to come back over the back half of the year to the point where we think corporate business travel by the end of the year will be flat to 2019 levels, and we think group will be about 90% of 2019 levels.
I've talked to a lot of folks in the hospitality industry right now, Kevin, and they're all telling me that it's still hard to find workers, whether it's someone at the front desk, whether it's someone to put food in the buffet section. How are you addressing this?
Yeah, look, we're getting really creative in terms of attracting talent. Look, we have a great business in hospitality, and it's a wonderful place to work, as evidenced by us being named the #2 great place to work in the U.S. just very recently. And people can have great careers in hospitality. And actually, it is tough to get labor still, but it's not as tough as it was. It's getting better almost by the day. And as some of the dynamics that were going on during the pandemic, whether that was because people didn't feel safe going to work, or whether there were better alternatives out there in terms of, not working versus working, they're now coming back to work. And again, we're a really attractive business, and there's strength in our business, and demand is growing. And so we're actually having a lot more success in bringing people back to work at the moment than we had been. But it's still tough out there, no question.
Hey, Kevin, it's Brian Chung here. I wanted to ask you just about your portfolio of brands. If you kind of take a step back and compare the Hilton portfolio now compared to pre-pandemic, is it larger? Is it smaller? I know you opened, 76 new hotels just in the first quarter. Has that also coincided with rearranging or closing certain types of properties? I mean, is it bigger, larger, more skewed towards one demographic over the other compared to where it was prior to all of this?
No. Yeah, no, it's the same portfolio of brands. We had launched a couple of brands, relatively recently up when the pandemic started. But yeah, we've actually grown net units at a rate that has exceeded, we grew net units 5.6% last year. Our guidance for this year is that we're going to grow net units 5%. And we think that over the next few years, we're going to get back to growing at the rate we were growing pre-pandemic, which is about 6 to 7%. So we feel really good about the prospects for growth around the world. We love our portfolio of 18 great trading brands. They all drive significant premiums to their competitors in terms of the indexed revenue that they produce for our owners. And so it's a really great portfolio of brands, and we're growing at a rate that is comparable or exceeds any of our competitors.
Kevin, you touched on corporate travel earlier, and yes, we've heard that it is coming back. I wonder if you can take away anything from what you have seen in terms of the bounce back so far. Are we seeing, people travel for business as frequently as they did pre-pandemic? I mean, what are you seeing in terms of how behaviors have shifted on that front?
Yeah, they're getting there. I mean, I think I said, earlier in the segment, we think that corporate business travel will be back to pre-pandemic levels by the end of the year. And a little bit of the dynamic has been throughout the pandemic. we've been accommodating more small and medium-sized businesses. When the big corporate accounts, at one point were down sort of 90%, right, at the height of the pandemic. Those big corporate accounts, by the way, were only down 12% in the first quarter. And small and medium-sized businesses are out there traveling to a level that they were, in 2019. Overall, in the first quarter, our business mix, which normally pre-COVID would have been about 55% of our mix, would be business transient. That went down all the way to about 35% during the pandemic, and that's now almost just about halfway back. It's about 45% of our travelers. So that segment is growing, and we think that in the end, when it's all said and done, there might be some slight differences in the way people move around, and there's a lot of debate about, digital nomads and will people go back to the office or not. But we think largely when it's all said and done, our mix might be slightly higher leisure versus business, but it'll look an awful lot like what it looked like pre-pandemic. We think that people's travel patterns are largely going to go back to normal.
And Kevin, you've long been the hotel development guy also at Hilton. How will higher interest rates be a deterrent to growth over at Hilton and the lodging industry more broadly?
Yeah, look, rates are up a little bit higher, but again, in the context of where they've been historically, rates are still relatively attractive, and so it is a little bit of a headwind to new development. But what's a massive tailwind to new development is demand for travel, right? And people feel really good. Our owners feel really good about the prospects for travel. We expect our signings to be up in the mid to high single digits this year in terms of signing new deals, and what that's reflective of is a little bit higher input costs, including the cost of the developer's capital, but a lot of optimism for growth in the future. And so along with higher interest rates has come a little bit more inflation, and we reprice the rooms every night. And so inflation is a tailwind both for our business on a same-store basis, but also for our hotel owners and developers, and they can see that. And so they feel good about the future. And, in any given deal, it gets a little bit tougher when rates go up. But in the end, hotels are pretty profitable businesses. They provide really good cash-on-cash returns. And so even in a slightly more elevated interest rate environment, we can still do quite well, and our owners can still do quite well. And thus is why we think we'll return to a growth rate of 6 to 7% over the next couple few years.
All right, Hilton CFO Kevin Jacobs, thanks for joining us. And thank you to Brian Stasi as well.